Hey everyone, Archer Aviation stock is down 70% off the high, and I've had a lot of subscribers ask in the comments section if the stock is a buy on the dip. So in this video, I'm going to review Archer Aviation, look at its prospects, and answer if long-term growth stock investors should buy this high-flying stock on the dip. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Archer Aviation's mission is to transform urban travel, replacing 60 to 90-minute commutes by car with estimated 10 to 20-minute electric air taxi flights that are safe, sustainable, low noise, and the key part here, cost competitive with ground transportation. It aims to be the Uber of air travel, right? It wants to be like Uber, where you can just take one of these instead of taking an Uber. Now, this is an exciting development. This is an exciting company. If it can achieve this, of course, its prospects will be explosive. If it can achieve this target where it's delivering 10 to 20-minute air taxi flights that are competitive with ground transportation. If you think of cities like the one I'm in Los Angeles, people are commuting to their jobs almost 80, 90 minutes sometimes. Going 80, 90 minutes and then coming home 80, 90 minutes. So imagine how much this would help that, right? How many people would be willing to pay to take one of these instead of commuting 80, 90 minutes both ways, right? And they would be willing to pay a hefty price for that because that's an added 2 to 3 hours to their lives every day, 5 days a week, 4 weeks a month, 12 months a year for however many years they're going to work. So this could be a massive development, a huge convenience benefit for people's lives. The difficulty is in actually achieving it. That's the difficulty in achieving it, in developing the technology to begin with. And then the second part is also difficult in getting all the regulators and the politicians to agree to allow you to operate in the cities. That's also difficult. Not only do you have to achieve it, then you have to get all the approvals to make it necessary, to make it approved, to make it operatable. And sometimes that second part could kill the business because regulators and politicians might ask for so much in terms of proving certain capabilities and safety and taxes and fees and regulatory, and all of that could make the business not worthwhile or add so much cost that it would be not worthwhile for consumers. Sometimes that could be the breaking point, and hopefully that's not the case here. Hopefully they're able to do this. Hopefully they can achieve this, because regardless of what city you're in, well, I shouldn't say regardless, but there are so many cities around the world that would benefit from this availability. So that being said, Archer Aviation hasn't really generated any revenue yet. It's been making deals. It got a $10 billion deal with United Airlines. That was a huge improvement. It got a deal with the Air Force. It got a deal with some other governments, with Stellantis. And so it has orders, it has support, it has funding, but it hasn't yet generated the revenue because it's not yet approved. It doesn't have a product that's ready to be sold, that's approved and ready to be sold. It has buyers waiting. It has buyers waiting, ready to buy it, but doesn't have the approvals, doesn't have the product ready in the form that the buyers are ready to buy it at. Remember, these agreements that Archer is making with its buyers, they're assuming that they're going to deliver a certain product with certain capabilities. If Archer Aviation cannot reach that, or it takes them a long time to reach that, that's another story that could risk those deals. But so far, in the trailing 12 months, operating income, they lost $440 million in operations in the trailing 12 months. And they've reduced those to some degree. And these are all going to, these need to continue. They need to continue development, research and development, spending, testing, and working on all of that stuff, trying to get approvals and all that. That's going to cost money. It's good that they're making deals with these companies, and the good news with these companies and the deals that they're making is that they're requiring the companies to pay them cash when they make the deal. So they're not letting these companies make a deal just for publicity's sake. They're entering into these deals and telling them, okay, if you want to secure an order with us, you got to pay us a certain few $1,000,000 so that you can be in line to receive our product, and you got to pay us up front. That's what I like about these deals. That's what's good news for Archer Aviation. So the company has $461 million in cash and short-term investments. So looking at its trailing 12-month operating income of negative $440 million, it has about a year's worth of cash and short-term investment on hand. And it's got deals in place where it's going to be receiving cash payments from some of these partners that it's made deals with. And it has a borrowing capacity, a borrowing facility where it can borrow money. So it should be good for at least 1 year. In that time, if it can make progress, hit a few milestones, that will allow it to raise more capital and more cheaply after it achieves these milestones. Every time it hits one of these milestones, it makes it easier for Archer Aviation to raise more capital, which then makes it easier for them to hit the next milestones, because then they can use that money to further their development. So it's like a positive virtuous cycle. Every time they hit a target, every time they hit a milestone, it makes it that much easier for them to move even faster in developing this technology. So Wall Street analysts expect Archer Aviation to generate about $4 million in revenue in 2024. That's, hardly anything for the company. You saw the scale, $400 million in operating losses. So this is barely going to put a dent in the company's losses. But starting in 2025, analysts expect the company to really ramp up and start meaningfully generating revenue, $69.72 million in 2025. And my suspicion is, if Archer Aviation generates $69.7 million in revenue in 2025, it's probably going to generate hundreds of millions in revenue in 2026. Meaning if they've gotten enough prospects, if they've hit enough milestones to generate 70 million in revenue in 2025, it's likely going to multiply in 2026 and 2027. The total addressable market opportunity was estimated around $40 billion by 2027, according to some estimates. I suspect that will grow even larger as this market expands. So if it hits this milestone by this time, I think it'll be even better than expected. Although this analyst expectation of 69.72 million is an average of the analysts that are following Archer Aviation stock. Some analysts expect much better prospects from Archer Aviation. I'm sure Cathiewood, who's a supporter of Archer Aviation, would expect much better. And there are some analysts who expect much worse. So this is an average of expectations for Archer Aviation. And finally, I wanted to look at valuation. Archer Aviation is trading at a forward price to sales of 18.62, which is on the expensive side of valuation in terms of forward price to sales. Now, the stock has been more expensive. Of course, the sell-off, it's down 69.8% off the high. So after the sell-off, it's trading at a more appropriate valuation, although it is still expensive. So is the stock a buy? Well, I would place it right on the borderline. It's proven enough at this point to intrigue me, to intrigue my interest, because it's proven, it's hit a few milestones, it's secured deals from reputable partners that have paid up millions of dollars to secure orders of the aircraft. And so I'm intrigued by that fact, although it's still a while away before it can actually be an operatable business. So there's the pros and cons there. So I would place it right on the borderline. If you're an extremely risk-seeking investor, if you like risk, if you're after that high risk, high reward type investment, then Archer Aviation can be right for you. But if you're more of a risk-averse investor, then I would say you're more of the wait and see borderline, on the borderline of that side, where you're just going to want to wait and see further development from this company before you jump in and buy the stock. So depending on which side you're on, it's very close whether Archer Aviation stock is a buy or a hold. But in my opinion, it's on that borderline between a buy and a hold. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.